Morning guys, Joel Frank here, market analyst for YouTrading, and welcome to the midweek market update. Not really that much has been going on so far this week. I'll show you the charts in more detail in a second, but pretty much global equities and US equities remaining pretty much at record high levels. Bond yields have remained pretty subdued, and FX markets and commodity markets like precious metal markets haven't really moved out of last week's ranges. In terms of the news we've had so far this week, I mean, there hasn't really been that much. Like as we said in the podcast, me and Neville on Monday, things were really going to get going from Wednesday or from today onwards, because this is when we start getting some of that important US data coming through. Remember, we've got ADP national employment data today, we've got ISM manufacturing data tomorrow, and then the official jobs report on Friday. So those are the three data points, specifically the one on Friday, the official jobs report, that are really going to get things moving. But yeah, in terms just quickly of what we had this week, there are some concerns about the spread of this Delta variant. Not so much in the UK, where the country is very well vaccinated, and it does look as though vaccines work against this Delta variant, but certainly in countries elsewhere in the globe, like Asia, Australia, New Zealand, where the vaccine rollouts haven't been as good, and there are concerns that this Delta variant could start a new wave of COVID cases, which obviously wouldn't be good. Of course it wouldn't be good, but hasn't really knocked market sentiment too much. In terms of other things, I mean, I guess it's probably worth mentioning US consumer confidence data that we had out yesterday that was much stronger than expected, which has probably contributed to the underpinning of market sentiment. So anyway, let's take a closer look at some of these charts then. So you can see the first one I've got up here. These are 1 hour candles. I'm quite zoomed out. This is the S&P 500. And you can see this selling pressure the other week, that was all in wake of the Fed. But as has been the case time and time again, if you zoom out, you can see what's the strategy that has been working over and over again. It's been buying the dip. You can see it's happened numerous times. And this most recent dip, you see it happened back in May as well. Buy the dip, buy the dip, buy the dip. And this time was absolutely no different. Has taken us, only a week and a half, or only a week really, to recover those post-FOMC losses and push on to current levels where we currently are. And I think this pretty much tells you that markets, they're not really that worried by the Fed's more proactive stance. Potentially, the thinking is that if the Fed does act a little bit earlier in raising interest rates, by raising them in mid-2023 as opposed to wait until 2024, then that might actually be better for the economic cycle, because if the Fed allows the economy to overheat too much and then has to raise rates really quickly, then you can have more of a boom-bust kind of thing, which isn't so good for equities in the long run. Equities would rather a smoother growth path, which a more proactive Fed might provide. That seems to be the kind of thinking that's underpinned the recent rally. Of course, data this week could make things choppy. If the jobs data is really strong, then that could trigger some concerns that the Fed might want to get quite aggressive with its rate hiking cycle, more aggressive than markets might like, which could send stocks lower. But anyway, we will see. Moving on, why don't we have a look at crude oil markets next? Now, pretty much the same story, just been going sideways for most of the week. Still trading close to recent highs. You can see this is WTI. 74 is the level we've struggled to get above so far. But as you can see, we've got this trend line here, which has been in play over the last couple of weeks. And that does seem, or basically the last week. And that does seem, the last month actually, sorry. Anyway, point is that trend line is still intact. And you can see here that you've got the 21-day moving average in orange, 50-day moving average in green, and 200-day moving average in blue, and they're all pointing upwards. The technicals are looking good and the fundamentals are looking good as well. Last night we just had private weekly inventories which showed a bigger than expected drawdown in US crude oil stocks, which basically all sort of goes in line with this thinking that the oil demand recovery in the US is strong and the global oil demand recovery remains strong. Potentially this Delta variant risk could be holding back gains from going above 74 for now. But yeah, things very much still looking quite bullish for crude. In terms of FX markets, and we'll talk about gold as well, because actually gold looks quite similar. But yeah, we're still within recent ranges, like I was saying at the start of the video. This was the FOMC induced sell-off in euro dollar. Took us down from around 121 to current levels swinging either side of 119. And yeah, for further direction, we're going to be looking to this US data. If it's really strong, then we could see a break below. If it's pretty weak, we could see a move back towards these highs from earlier in the week, or even perhaps above that. And you've got these 21-day moving average, 50-day moving average. 200-day moving average, 50-day moving average, and 21-day moving averages, all between about 120 and 121. They could offer some decent resistance. And then gold, onto gold. It's kind of a similar analysis here to euro dollar. Here's the FOMC decline. And we're kind of still in recent ranges, although gold looking a little bit more bearish. As you can see, it is testing the bottom, or it is testing this area of resistance around 117, or in the 117.50s, which if you look back, all the way back here, it has been quite an important level over the last couple of months. And yeah, like I was, same analysis as with euro dollar, strong US data later in the week could send it lower, whilst weaker than expected data, we could see a bit of a recovery. But anyway, yeah guys, hope that video was informative and I will see you all in the next one.